Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with Andy Schectman of Miles Franklin. Andy, thank you for coming back on the show.
Great to see you again, Steve.
Yes.
It's been, about 8-9 months maybe since I last ran into you.
Yes.
Always smiling too. That's good.
Oh,
I like
always
that.
happy.
But that's no one wants to be around a buzzkill, so it's
That's true.
it's good to be back. Good to see you again.
You too as well. I got to say, you're always looking sharp, man. I need to take a lesson out of this guy's
my
book.
wife dresses me. Thank you. I appreciate it.
Awesome. Okay, so you just gave a big presentation on the BRICS and filtered in a little petrodollar in there. Maybe you can summarize that for the viewers in a couple of minutes.
I mean, to summarize it, the petrodollar status is in peril. 90% of the world, when you factor in the Belt Road Initiative, the BRICS, the Eurasian Economic Union, and the Shanghai Cooperation Organization, are all joining together rallying against the Western hegemony. And the crux of it all is the loss of the solo petro status, or the sole currency, the sole settlement currency for oil. That was the promise that we made to Saudi Arabia. We'll protect you, and for that privilege, you'll denominate oil globally in dollars. And this is being challenged, and the ramifications of what happens if and when it happens. And you know, the problem that most people have in this country, Steve, is that they need immediate gratification. It's not fast enough. You need to be able to take a step back. You need to be able to see the pieces that are slowly and methodically being put into place. That's what I tried to show, that it's not even a matter of if, but when. And, you know, tomorrow's not quick enough. I understand that, but you look at the pieces and you can see it's becoming very concerning that it's a trend that I believe will happen. And we're getting closer to that moment. I don't know when, but to me, it's inevitable at this point.
Yeah. The one that concerns me the most is the petrodollar, just because countries are starting to transact outside of that. Which I think, what are you going to do as a rich Chinese businessman with a bunch of dollars, other than bring them back here to the U.S. and put it into something tangible, maybe like apartments or something, you know?
Right. Well, I mean, I think the question will become, what happens when the dollar becomes a hot potato? What happens when Saudi Arabia, who's now joined the BRICS, joined the Shanghai Cooperation Organization, joined the New Development Bank, told the folks in Davos that they're open to taking other currencies for oil, and every OPEC country's on the Belt Road. What happens when they say, look, you guys signed an executive order in 2021, that's what pushed us down this path, and you weaponize the dollar, making us think, well, maybe holding dollars exclusively isn't the smartest plan. What happens when they say, look, thanks for the memories, you guys are going green, we're not. We've partnered with what amounts to 90% of human population that isn't going green. So we're not going to take oil and price it in dollars anymore. We're not going to take dollars for our oil. We're going to take other currencies, or maybe ultimately a new settlement currency that someday the BRICS come out with, or maybe it's gold, or maybe it's the yuan, whatever it is. If it's not dollars, that creates a problem. And then dollars get dumped, and the dumping of dollars creates massive inflation here. The byproduct of that is spiked interest rates to compensate for the loss of purchasing power in that inflated currency. And everything that makes people feel rich in this country is inversely correlated to a spike in interest rates, not to mention the dumping of the dollar. Is it the Klaus Schwab moment? And I don't know. It certainly has the feelings of something along those lines. And that's why I brought up the comment of Thomas Jefferson 300 years ago. If we allow a central bank to control the money supply, first by inflation and then by deflation, we'll end up renting the land that our forefathers conquered. You can see that happening. We've seen inflation, now interest rates are rising, not to the level that I'm talking about if the dollars get dumped, but the byproduct of these rising interest rates is putting great strain on the economy. There's your deflation. And managing that becomes exponentially harder. And then you end up renting, just like Klaus Schwab said. So is it prophetic? Is it coincidence? I don't know, Steve, but it really is weighing on me that it's becoming more of a reality.
Yeah. So how are protecting ourselves from all of this? How are sales recently with gold, silver, platinum, and palladium? What are you seeing the most of?
It's interesting. Last year was by far our biggest year ever. This year, we're ahead of that considerably, yet it doesn't feel like it. The first quarter was extraordinary. It was unlike anything I've ever seen. When Silicon Valley Bank and Signature Bank failed, we added 14,000 clients in 45 days.
Wow. Sir? Thank you.
That's okay. That's what you do. Nice save there. That's what you do when you're doing things live. Well, we added 14,000 clients in 45 days, and the banks were bailed out. And one of the things I talked about in my presentation was that in the Dodd-Frank Act, bailouts were made illegal. And Janet Yellen made an exception because those banks were too systemic and would have brought down the system. So when the Dodd-Frank Act was written, it said now bail-ins are law, meaning you are an unsecured general creditor of the bank. What happens when the next bank fails and is bailed in? When the majority of the people in this country have no clue what a bail-in is. It'll be a religious experience. That doesn't mean, just your personal money. What about the guy that's running a small to medium-sized business with $5 million in operating capital in a bank and loses it all but $250? At that moment, I think you'll see precious metal sales go through the roof. I get a lot of trouble for saying roof because I'm from Minnesota and that's what we would say up there. I moved to Florida and everyone says, what the hell is a roof? It's like a roof. Yes. So anyways, I think it'll go through the roof and I think it's inevitable. I truly do. And I think when we see more banking problems, which I expect to see in the coming months as these short-term emergency lending programs that the Fed came out are all due to sunset in the next few months, 6 months or less, at $100+ billion, $150 billion that needs to be paid back by banks that don't have the ability to do so. And when the next bank failure happens and it is bailed in, I think the inability to source metal will define the industry. Right now, lowest premiums I've seen in 4 years, best availability I've seen in 4 years. And the confusing thing to me is that it should be the opposite of that. Because I see what's coming, most people don't. When they do, like that, it changes.
How are, as the trader in me can't help but notice that platinum and palladium seem pretty cheap now when you, I'm not talking dollars, I'm talking in ratio to gold. Are you seeing sales in that or?
No, not really, not very, so.
Man, it seems like such a good deal.
It is, it's the same argument as silver in that in its relationship to gold, everything is upside down. I think the reason you don't see much in the way of sales is that when the world thinks of safety, when the world thinks of protection, I think they think of gold and silver, which have been wealth for 5,000 years. Platinum and palladium do not have that history. Platinum's 30 or 40 times more rare than gold. And
half the price.
Yes, and it shouldn't be because it was always more, in fact, as much as double the price. So I guess what I would say to you is that the argument that you bring up, the trader argument, is very, very valid. But I think there's a difference between return on and return of. And the real concern that people have is the erosion of the dollar and of their savings and of their wealth and of their bank accounts, and they're more looking to protection, as I think they should, rather than profit. That doesn't diminish the argument. On top of the price, you have the majority of the world's supply of both of those elements in South Africa and Russia. So the argument is incredibly sound. And I think everyone should have a small piece of their portfolio in that. To me, the difference is the gold and silver, even though they offer great upside, to me is wealth. Platinum and palladium is an investment. And I think there's room for both, but that's why I think we haven't seen the sales that the distortions that you speak of would imply we should.
Okay, interesting. Yeah, I'm looking at it more from a trade perspective, I guess.
Which is valid.
Okay. And what percentage of people's net worth do you think should be in physical precious metals?
If I were truthful about that answer, I'd lose credibility. So I'm going to say it the other way. I'll say it another way. One of the slides I put up today showed $155 trillion in debt that the United States has, $32 trillion in on-balance sheet obligations, and then Medicare, Medicaid, Social Security, and government military pensions make up north of $120 trillion. We have $155 trillion in debt backed by $5 trillion in assets. I asked the crowd how many people knew what the largest single asset of the United States was. About 15-20% of the crowd raised their hand, the rest didn't. The largest asset of the United States is student debt. 1.6 trillion, roughly 40% of the assets of this country are student debt. So you take that out of the equation, we have $3.5 trillion in assets backing $155 trillion in debt. We're a banana republic. At least we don't jail our political opponents, right? At least not yet. And so the point of it is that what exposure do you want to that system and work backwards? So the traditional answer is 5 or 10%. Well, that was proposed by financial advisors who don't make any money selling commodities or tangibles. I don't think that's the right way to look at it. I think you ask yourself, Are we at a crossroads? Are we about to cross over a Rubicon, a historical once-in-a-generation shift away from debt instruments and the dollar and the Keynesian system? And if you believe, to whatever percentage you believe that's true, that's the percentage you should hold outside the dollar in things like gold and silver, which have been wealth for 5,000 years and have outlived every pandemic, German hyperinflation, the Great Depression, 2 wars, and everything the world has ever thrown at it. It is wealth. It is not an investment. Platinum and palladium are. Gold and silver are wealth by historical standards, and that's the way I look at it. And if you look at it that way, it's easier to say, well, maybe more should be in my portfolio because I'm not looking to make money on this. I just want to know that it will be there when I need to call on it, or my children or my grandchildren. History has shown that to be true. So it's a tough question and a fair one that I think should be much more of a larger percentage than the conventional wisdom would dictate. But unconventional times call for unconventional thinking, and these are anything but conventional.
Yeah.
Would be my take on it, my honest take on it.
Okay, well, thank you, Andy.
Yeah, absolutely, Steve. It's good to be
Yes.
back with you, man.
Yes, and if you want to get precious metals, there's a link down in the show notes. It says Precious Metals Steve Style. Andy sells gold, silver, platinum, and palladium if you want to make a little sidebar investment. Andy, thank you very much for coming on the show.
Always a pleasure,
You
my
have
man.
a great rest of the day.
Yeah, good to see
Thank
you.
you for tuning in. Support the show, hit like, subscribe, and we will talk to you next time.